Hello and welcome to the latest ARC Spotlight. I'm Tom Lemmon and I'm delighted to be joined by Gregor Burkart from Enpal. He's their SVP of Asset Financing. So welcome, Gregor. How are you doing?
I'm doing great today. Thank you very much, Tom.
So you guys at Enpal have become, I called you the cult heroes of sort of green finance in securitization. Can you sort of explain maybe to people who don't know too much about Enpal, what you guys do in solar and things like that?
Absolutely. Well, when Enpal was established 9 years ago, roughly, the idea was to make the transition to renewable energy more accessible for people, right? So kind of we wanted to make sure that people previously where they had to go to a local installation shop to get their solar system, get their heat pump, the installer would tell them a lot of stuff they wouldn't understand. So we really wanted to make things easier, and accessibility we defined in two avenues, basically. One being digital access, so people being able to actually order a PV system, order a heat pump from their kitchen desk at home. So that was enabled through kind of video conferencing sales, digital marketing, digital planning, and also digital contract signing. The other avenue, however, was make solar more accessible through financing, embedded financing. And this is how we were kind of setting up a financing solution, and that's why we set up a financing solution for our customers that essentially allows them to, instead of purchasing a solar system or a heat pump for, let's say, 35 to up to 60,000 euros, which is arguably one of the largest expenses a household's ever going to have, kind of break it down into digestible amounts, monthly amounts that ideally match or even undercut what they've previously paid for fossil electricity or heating. And we came up with a 15 to 25 year financing product that we kind of wrapped into our solution. So customers are now faced with the choice or the option of actually being able to pay the same or less while transitioning to renewable energy. And ideally, also, it's a bit of a retirement saving as well, because once the system is paid down, it continues generating electricity.
And how does that then turn into the ABS products that we see today? Because I guess we call it the first European solar ABS, but it's a bit more like a consumer loan as well?
Arguably, yes. The exposure is very much similar to a consumer loan, and I would say if you cut through all the greenness of the product, cut through the solar, cut through a heat pump, what you get is an exposure to a German residential house owner, something that you rarely get, to be honest. The rarely is German RMBS. So that's quite interesting for investors. But then, the idea was, if you set up something and you build an entire business case around an embedded financing, and the company has grown to a bit more than 1.1 billion in revenues last year. You need to make sure that the financing also is scalable, and scalability means you don't want to have friction in the customer journey, which means it makes it very hard to partner with the bank and then hand over the customer to a bank, and they will probably not serve the customer well, and then it drops off. So we'd had to kind of integrate this and build this proprietary solution ourselves. But then secondly, if you generate and originate billions of originations every year, you need to make sure this is scalable. And that's why kind of we set up our securitization platform to be able to ultimately tap capital markets, and enable that scalability. For the next 5 to 10 billion, we want to make sure we kind of this flows through the refinancing engine, as we call it, into the markets.
And what's been the sort of biggest challenge you've had? I mean, it must be really hard to bring a new asset class, get investors comfortable. How do you go about doing that?
It has been quite a challenge, to be honest. Initially, there's a lot of groundwork they need to do. It's been months of dedicated work where, years actually, where we had to kind of get our track record and data ready, where we had to educate rating agencies around the product. That probably, was one of the toughest, steps in the process. Around 12 to 15 months of conversations with rating agencies, making them understand what the product is, what the value proposition is, but also what making sure we hit the right liability structure, because it comes with a lot of responsibility as well. If you want to establish a new asset class, you need to make sure you do it right, and building a liability structure that is appropriate for that asset class also, required a lot of thought. And ultimately we went live with our first public ABS in October 2024.
Wow, was it that long ago?
And it was a fantastic outcome, I would say. Coming back to your question, however, yes, you're right. It is to some extent a consumer loan exposure that you have, but then again, the traditional consumer loans, which you issue against, a pair of sneakers, whatever vacation. They are much more junior, I would say, to ours. Our consumer loans are issued in a way, I would say actually they're much closer to an RMBS.
Yeah.
Because actually the customer is very hesitant to not pay his electricity, not pay his heating. That's probably the last thing he will stop paying prior to kind of defaulting on his mortgage. Yeah. So for us, this is really an asset that is, I would say unsecured like a consumer loan, but from a seniority much closer to a mortgage-backed security.
And how does the sort of changing rate environment that we've seen over the last few years, changing subsidies as well? I know obviously things that have renewable energy, you have different sort of schemes all over Europe. How does that affect your planning and the whole process that you go through?
I guess on the subsidy regime, the message is very simple. We would ideally want the government to, not do anything, keep everything as it is. What we've seen in the past is as soon as they start, even in a positive way, changing the subsidy regime, amending the policies, it really kind of creates friction in the market. People stop paying, they put everything on hold, they wait for what's going to happen. We had this one subsidy that was put into place, which is well meant for us. It was a subsidy for a heat pump, for a solar system, a battery, and an EV charger at the same time. 10,000 euros, great subsidy. But then 3 to 4 months prior to the subsidy going live, everyone stopped paying, stopped buying, and after the subsidy went live, and it was funds were exhausted within 24 hours. Everything went silent for another 3-4 months. So kind of the market was entirely disrupted. So please, let's not change the subsidy regime. PV doesn't require subsidies at this point in time. Heat pumps still do, but won't, in the short to medium term future. So, that's probably our ask here. I guess on the rate side, what are we competing with? We're competing with a traditional consumer loan issued from a bank. There's no other form of financing that customers can get. And those are also affected by rate movement. So currently we're the only ones being able to offer a 25-year loan that is unsecured. I guess at some point there might be an issue with the monthly installments becoming too high.
Right.
But then again, also as a counter trend, you have decreasing cost of hardware, which just makes systems cheaper and cheaper. 10 years ago, batteries were the difference in battery prices, they went down 90% over the last 10 years. So there's really also a lot of ground to be gained just through the cost of hardware. And
you touched on it, but do you find yourself with your ABS deals? Do you find yourself bringing on new investors to securitization? Like, do they come to you because you're green? You've got an ESG angle. Do they then join in when they might otherwise not?
That's a very very interesting question. Actually, it's a very interesting question. I would say so far no. So the investors we've seen in our deals, they are active in the ABS markets. I wouldn't say that the ESG principles or the ESG angle opens new doors. I would say it ticks certain boxes and makes our asset certainly more appealing, but then it still has to comply with return requirements. And I wouldn't say there's a premium or discount based on ESG. What we're currently trying, and that's why your question becomes very interesting. We also have an infrastructure platform where we do traditional project finance deals, and there's a lot of insurances and pension funds who are keen to engage. And through kind of the regulatory environment, Solvency II, they're also incentivized to invest in qualified infrastructure. But then, we are at the intersection of, I'd say, securitization and project finance. So kind of what we're trying to do now is, while complying with Solvency II and, the regulation, getting them or making them able to invest into our securitizations as well, because they're very keen.
And they might not have typically been an ABS investor for something like Golden Ray.
Yes, because of regulation, and it's not easy because the regulator penalizes a granular portfolio penalizes ABS in general. Still.
Yeah.
But then also a very granular portfolio of consumer loans. So you really have to repackage it, and it's quite some structuring effort. But we see a lot of I would say sensitivity in investors being willing to transition over and looking at these kind of assets, which might still comply with their infrastructure mandate because the underlying hardware is very kind of compliant. It's just something very unique. But as always, and as we are used to, there's a lot of pioneering you have to do, right?
Yeah.
And education.
I guess that brings me nicely onto something I think I've heard you talk about before, which is saying you don't want to be the only residential solar provider in Europe, but also in ABS. You want there to be more Enpals, if you like. How is that going to happen over time? Because the regimes, they're so disparate within the EU and the UK, obviously. What needs to happen to get more solar providers and heat pump providers in the market?
Again, this is an important question. This is an important question because an asset class can only be established if there's more originators and issuers, right? So far we have seen there's a lot of activity taking place. We see players in the UK, we see players in Spain. I guess the key challenge in Europe is the issue of fragmentation. You have to, and we see it ourselves when we look at geographical expansion. There's a lot of different categories or KPIs that you have to look at before being able to kind of also comparing countries. It makes it very, very tough, and that fragmentation doesn't really play into the game of scale. So we are native Germans. Obviously the market is very big, and we've still 95% exposure to Germany. We are very actively growing in Italy as well, and we might look at other jurisdictions in the future. But it becomes a bit of a challenge, to reach that scale. And for an ABS, you need at least 150, 200 million, in a portfolio. And you need a track record of, let's say, 3 to 5 years.
And that track record needs to be in each country as well.
Precisely.
Okay.
And because if you look at the underlying exposure, again, it's a house owner, and the German house owner might, or definitely does, behave differently to an Italian house owner, to a Spanish house owner, UK house owner. So that becomes a bit of a challenge, and we're still, I guess my hope lies not so much in the solar space, but for, maybe in the heat pump or insulation space, house renovation loans. There's more down the line, also more, a more diverse offering across Europe that could kind of all play into the sector. I wouldn't say my expectation over the next maybe 2-3 years isn't so much that there will be 2-3 more solar ABS issuers, but there might be more green, ABS issuers that, in the end also have an exposure to a house owner, to a European house owner. And I guess probably that's where the sector is evolving to.
And just in terms of performance, when it comes to the Golden Ray ABS deals, how have they performed in the last couple of years?
That's really a testament to kind of the underwriting and also the exposure, and that's probably also the story we tell to investors. Ultimately, the German house owner is quite a reliable borrower. We've seen that throughout the great financial crisis. We've seen it throughout the pandemic. Right, there's been very reliable repayment behavior, and that we've now have seen more than 6 years of performance history, 6.5 actually, in our books. And what we see is, and that's that I would say is quite very promising, is net default rates in the high single digits to low double digits basis points. So it really is. It's super comparable to an RMBS performance, wow. Right? So that's what we see in the German RMBS space as well. Kind of how many defaults you see empirically around 15 basis points per annum. So this is kind of the area we play in, and this makes this a super valuable asset. And frankly, I believe there's a lot of juice still in the. Yeah. If you look at that performance versus the pricing, I think it's a very attractive pricing still, and it has potential to go down even further. Also something that we've seen now in Golden Ray too, right? There's more margin compression, and I would expect more to happen even.
Yes, I can remember quite a lot of oversubscription on particularly further down the cap stack for those deals, which was good to see. I guess then, just before we finish, what do you see for Enpal in terms of its ABS platform for the next couple of years?
Excellent question, and I guess that's probably what also keeps us awake at night, at least myself. Where are we evolving into? I was mentioning there's probably 3 objectives for Enpal as a group. It's the scalability of the refinancing. I think we are there. We now have evolved from refinancing is not the constraint of growth. Also with the access to capital markets now. The second objective is capital efficiency. So really try to also, while we ramp the portfolio in the warehouse, be as capital efficient as possible. Obviously, our capital is quite valuable as a private company. So kind of being able to kind of ramp without huge kind of capital requirements. Also, if you're able to recycle later down the line is key importance. So that also we've achieved over the last 12 months. And the third objective is ideally to operate asset light, which means deconsolidate, get the assets off the balance sheet, because we're not the perfect holder of that exposure, right? There's investors out there, there's pension funds, they want to have that kind of long-term, low volatility, high yield exposure. Ourselves, we would much rather want to reinvest that capital into tech, into growth, in expansion. So I would say kind of these 3 objectives, we follow, but then we also look at geographical expansion. We look at diversifying the business away from, we started with solar, we added batteries, we added EV chargers, this entire ecosystem that you built. We added heat pumps. Logical next steps could be smart thermostats. You could think about electric vehicles. This entire ecosystem that is built, and as per the Enpal vision, all of this requires some form of financing. You can think about we're quite active now in the commercial and industrial space, C&I. We're also one of the market leaders in smart metering in Germany. Also huge market with huge potential. Again, an asset that requires financing, some form of refinancing. So I would say the evolution is, we've built this platform now, the Golden Ray platform on solar and heating. But I guess there's many more, assets down the line that also require some form of financing. And I guess that's where I see potential also for securitization and the public markets. This could all become part of the broader asset class.
ESG medley to offer up securitization investors.
Absolutely.
Well, on that note, thank you so much, Gregor, for your time, and thank you for watching.
Thanks, Tom.